Singapore's second and third largest banks have turned in stronger second quarter results, with diversified income streams helping to offset pressure from lower interest rates. UOB's net profit rising 10% from a year earlier to 1.5 billion Singapore dollars. Or fee income climbed 5% to 665 million Singapore dollars, driven by record wealth management fees. Like its peers, lower interest rates weighing on lending, net interest income slipping 2% to $2.3 billion as lending margins tightened. UOB also planning to expand its Hong Kong wealth business, tripling its private banking advisor headcount.
Hong Kong remains an important gateway between Greater China, ASEAN, and the rest of the world. Our focus is on building a more balanced franchise, including private banking and global markets.
OCBC's second quarter net profit rising 22% from a year earlier to 2.2 billion Singapore dollars, beating estimates. The biggest boost came from non-interest income, which jumped 51% on strong wealth management and insurance performance. The bank is also expanding its wealth business in Hong Kong. It plans to increase its wealth managers there by about 30% this year, adding 30 to 50 new hires. Both banks also maintaining shareholder payouts, OCBC declaring a dividend of 47 cents a share, while UOB will pay an interim dividend of 88 cents per share. A Moody's analyst says Singapore banks remain well placed on asset quality despite geopolitical risks and exposure to China's property market.
On asset quality, we do think that the bank's asset quality should remain fairly resilient. The banks are entering this cycle of perhaps geopolitical uncertainties with a fairly strong loan book. And in terms of perhaps the key area that we watch out for is their commercial real estate exposures in Greater China. But even for those exposures, we think banks have made preemptive provisions. Some of the banks are also holding on to provisions that they built during the COVID pandemic. And hence, we think that even if there are some slippages of asset quality from the loan book, the banks do have a fair bit of buffers to accommodate any such slippages.
OCBC CEO Teck sat down with CNA's Elizabeth Neil for an exclusive interview. He explains why wealth management remains a key driver of long-term growth.
Wealth is an important part of our strategy. We roll out our Next Frontier strategy, and under the Next Frontier strategy, we have a whole wealth strategy. We have confidence that we can work together, putting all the wealth units and provide solutions for the whole wealth continuum. So we have Bank of Singapore, we have OCBC, and we have Great Eastern. Together, we can curate value propositions for wealth customers throughout the whole continuum. There will be ups and downs in the markets, but for us, regardless of up and down in market, we see long-term potential in the wealth business, and we will continue to make investments into the wealth business.
How important is Southeast Asia for your wealth business? Any plans on expanding further in the region or even beyond? Because I know you have significant presence in Malaysia and Indonesia, for one.
Yes, Southeast Asia is our home market. So we certainly will want to continue to grow in these markets. For example, a few months ago, we announced that the acquisition of HSBC's wealth business in Indonesia. And there are suitable targets, of course, we will continue to consider. But meanwhile, we will focus on organic growth, investing in the wealth business. We have an ASEAN domestic strategy and a twin hub strategy. The ASEAN domestic strategy tries to grow with the rising affluence in each of the ASEAN domestic markets, such as Malaysia and Indonesia, aside from Singapore, which is a financial hub.
I also want to know if AI has started to contribute meaningfully to the bank's revenue growth, especially also in the wealth business.
AI certainly has made a difference in our wealth business, but I want to clarify that under our Next Frontier strategy, we have ADD at its core. ADD is AI, digital, and data. Under the ADD strategy, we don't overly focus on AI per se. What we want to do is to relook at our own processes, redesign the processes so that it is employee-friendly and customer-friendly. Now, after we redesign a process, we will digitize it, and we will also intensify the use of data and analytics. AI come in when it's fit for purpose. I am not able to isolate AI and say how much has it contributed to our wealth business. But all the investments we have made, all the redesign of processes we have made, the investments in new products, rolling out new products, collaboration between Great Eastern and Bank of Singapore for the high net worth value proposition, they have all shown good results.
OCBC has raised its interim dividend to 47 cents a share. Can we take it that you're confident in the sustainability of the bank's earnings even as net income comes under pressure?
We continue to work on our core franchise. We are fully cognizant of the NIM compression since last year. I have been working very hard to improve our income by focusing on non-interest income. And we have been very successful with that, and we have confidence that we can sustain the growth.